everyone. This is Rob Keens, your host with the Freedom Report. It is Friday, January 31, 2025, last day of the month. Tomorrow starts February. And this episode is going to be all about gold. And my question for you is, you got gold? Well, you may want to get it because it looks like mass shortages are coming around the world. And we're going to talk about what may have pricked that gold bubble, that derivative paper bubble, and led us into a gold squeeze. Not a gold squeeze just on the Comex, but a gold squeeze all around the world. We've got all the data for you on that. And stay tuned for the second half of this episode where I give you an update on the gold bills in Florida, Montana, in Missouri, in New Hampshire. We're going to talk about all of it. We've got two very special guests coming on the back half to help make gold money again so that we can use it and not the fiat currency, not be a slave to the CBDCs. We're going to jump right into the action. Man, the big news is shortages of gold in London, massive imports of gold into the U.S. And why is that happening? There are a bunch of different reasons. I'm going to show you what is the most likely, but I'm going to talk about the other ones as well. And there's so much data. You're going to love it. But before we get into that, let's talk about capital rotation. I love North Star charts. They're on the Kinesis channel. They're also on Twitter here, as you can see, and they're talking about capital rotation. They've been talking about that a lot lately. What is capital rotation, you ask? Well, it's when you rotate capital, meaning investment dollars, from one investment class to another. And look what's happening. We have a breakdown of the tech sector to gold. Gold is now outperforming the tech sector, the vaunted tech sector. Part of that was because of the AI debacle and DeepSeek and trying to prick in the bubble a little bit of the AI momentum that we had here going in the US and the tech momentum. But honestly, it had been happening before that because gold had over 25% return last year. And it's starting to return again this year in January. It's back up over 27, up to 2,800 even. And it's breaking new all-time highs, and the tech sector can't keep up. Capital rotation out of a previous 15-year bull market in tech, moving into safety, moving into gold. And if that continues through breakdown, what you're going to have is a massive gold market, I think, which actually started last year, when gold started rising for good and hitting consecutive all-time highs throughout the year. A little bit of fade to the end of the year, as I told you it would, and then boom, come January, popping back up. Report here from the 𝙎𝙬𝙀𝙊𝙍𝙏 letter on Twitter. Gold prices are now at 40% in the last 12 months as the US dollar and interest rates are up sharply. This has never happened in history. Let me say that again. You know you're in a gold market when gold prices are up 40% in 12 months, as the US dollar and interest rates are also up, and it's never happened in history. You want to say gold bull market? You want to say gold is taking the crown back from the dollar. I had that video out a couple of weeks ago. Gold is taking the crown from the dollar. This is what I was talking about. Gold has broken a forever trend, trading up against the dollar and interest rates when they're both up. The DXY is strengthening, interest rates are up, and the dollar is beating them. Again, never happened in history. I want to show you something on the CME Group data. I haven't shown this website in a little while. I used to go over it over and over again. Volume and open interest. When open interest is up, it usually means shorting. But this time, the shorts are being called for delivery. Why? Because on the February contract, 2025, this is not the dominant delivery month, ladies and gentlemen. The dominant, as you can see by the open interest column right here, is this month right here, which would be April, because there are 401,000 contracts. Remember, this is a futures market. You're trading on the future price of gold so that you can, if you're doing legitimate hedging, secure against the rise or fall in the price of gold in that month, so over a period of time, or speculating in the gambling casino like the bullion banks often do to try to make a few cents on each contract, but not to deliver the actual gold because they don't want to do that when they're short, record short, the four big banks that we talk about all the time. Well, guess what? You only had 18,000 contracts rotate off of February into April and the other months. 59,000 are sitting there standing in February for delivery. 59,296 contracts are standing in February for delivery. Now, they've got to roll these contracts before the end of the month because there's time decay on these contracts, because you're going to roll them to another month or lose some of their investment in them if the position goes against them. That's not what they're doing. They're standing for delivery. 59,296 contracts. I also wanted to point out that the last standing contracts in January on the last day of the month, 614, all got delivered. All got delivered. I'm going to show you why this is an anomaly on the delivery report. This is the NYMEX issues and stops report. It basically shows you how many contracts are being delivered. That's this column right here, the daily total, and then the cumulative. So the daily total is how many per day, and then the cumulative is how many total. And you will see the first couple of days of the delivery month, which actually starts the first 2 days, last business days of the previous month, to allow that 2-day window for people to begin delivering. So you can issue a delivery notice 2 business days before the start of the month. So on the first business day of that month, they'll have time to actually process that notice and deliver it to you. So you see, in January, the last 2 business days before January, there were a total of 1,693 contracts issued for delivery by the longs against the shorts. And guess what? 1,573 after that, and then it began to fade. This is a normal pattern. Within the first 5 to 6 days, you'll see most of them come up front because they all want it. So they're going to put in as soon as they can. They're going to take that delivery. The shorts are going to deliver, and then it fades the rest of the month. But that's not what happened, ladies and gentlemen. Oh, no. We had a nice little boost on the 7th of 1,710. And then on the 8th of 1,002, now we're up to 6,000 contracts. Then 594, 217, 365 looks like it's fading out. But no, we had 1,295 contracts on the 14th to bring the total to 9,109. And then more. It's accelerating to 1,420 contracts to make 10,529. And then you think it's decelerating to 1,279 and then 856. But oh, wait, on the 21st, we're still up over 1,212 contracts standing for delivery. And then 1,700 contracts. And then 1,100, then 1,194, then 1,062. Then on the 28th, with only a couple of trading days left, 2,923 contracts, the highest delivery demand at the end of the month, not the beginning of the month. I have never in history seen this in 5 years of looking at this report every damn day. I've never seen it. And then the 614 I was referencing here, every last contract stood for delivery on the last day. It's right here on the delivery report. 22,538 contracts in January. When have you ever seen that in the month of January? When have you ever seen those types of deliveries at the end of the month? Why does the market want that physical gold? Why do they want it? Well, we're going to talk about that. Here's an article from Reuters. It says gold surges past $2,800 as tariff threats reignite the record rally. Now, I did put out a tweet today on the Trump tariffs, and Trump is proposing tariffing every country in the world. I think it's Canada, Mexico, 25%. They are precious metal producers. And China, 10% for the fentanyl crisis. And China's a producer, although they don't let go of their gold, but more tariffs coming down the way. And so the story is that the tariffs are going to cause gold gold price to surge so much that people are pulling as much as they can back into New York for delivery against future contracts, especially when you see 22,538 in January, which is completely and utterly unheard of. What a bloodbath it's going to be when you get down to April. So they want to import now at the cheaper prices for those tariffs kick in. At least that's the cover story. Let's go on and read the article. Bullion on track to record best month since March of 2024. Silver, platinum, palladium headed for a monthly game as well. And it's not just gold. It's silver, platinum, palladium, all the precious metals. Market brace for Trump's tariffs on Canada and Mexico. Except for the gold's not coming from Canada and Mexico, is it? I'm going to show you that in a minute. And the U.S. PCE inflation uptick supports Fed's hold, meaning they're not going to cut interest rates. They're not going to raise interest rates. They're just going to sit right there in the middle because inflation ticked up a little. Now, it's not big inflation, but it's a little, but that's a different story. We'll get to that in a different episode. Here, per the Reuters article that came out today, quote, gold prices surpassed the key $2,800 mark for the first time on Friday. That would be an all-time high. Thank you very much. Fueled by a rush to safety following U.S. President Donald Trump's tariff threats, which heightened concerns about global economic growth and inflationary pressures. Spot gold rose 0.3% to 2801.29 per ounce by 1:41 p.m. Eastern time. That's today, after hitting a record peak of 28.17 earlier in the session. So actually, the peak is 28.17.23. Did you have that on your bingo card in January, ladies and gentlemen? There's a lot of uncertainty out there right now, and also wait-and-see attitude on the geopolitical stage with tariffs, was quoted Bob Haberkorn, senior market strategist at RJO Futures. Trump has set a Saturday deadline to slap a 25% tariff on imports from Canada and Mexico, and said he was still considering new tariffs on Chinese goods. It came out today. It was going to be 10%, and that goes into effect tomorrow. Tomorrow. You want to know why? Tomorrow. That's why they accelerate at the top of the month, except for these didn't come from Canada and Mexico. We'll get to that in a minute. Additionally, the mixed signals we're getting from the Fed and the Trump administration right now is causing uncertainty in the market. Trump wants to cut interest rates. The Fed wants to hold them steady, Haberkorn added. Earlier this week, Federal Reserve Chair Jerome Powell said there would be no rush to cut interest rates, again contradicting Trump's earlier call saying he wants to borrowing costs to be lowered because he knows economy is spur of the economy. He wants to spur energy. He wants lower interest rates. He wants the Fed to ease. He wants the dollar to weaken so we can grow our exports and grow our way out of this massive debt problem. We expect the strength in silver prices to attract subsequent discretionary trader interest. Given this cohort remained nearly flat as of last week, with gold printing new all-time highs, TD Securities said in a note. Very interesting. Over to the Financial Times. Gold stockpiling in New York leads to London shortage. Wait a minute. London basically ran out of gold, ladies and gentlemen, free gold, that is, because they were shipping it to the U.S. They've been doing that, I think, 400 tons since last year. We'll get onto that report later. And they basically ran out. Now they're running around with open hands saying, please, central banks, give us your gold. Now, what do you bet that the central banks, most of them are going to turn them down and say no? Because if they lease it or give it over to London to cover their contracts, at what point does a game of musical chairs end and the central banks try to sit down and don't have a seat, meaning they ain't getting the gold? At this point in time, given the shortages we're seeing around the world, here's what we know. We know there are shortages caused by rehypothecation, or basically reselling the gold over and over and over again. 100 times to 1 has been some previous indications in the last few years we've heard. 100 times to 1. And so now there's a scramble for physical. And if you're sitting there holding physical and nobody else owns it and it's yours, are you going to lease it out knowing that that's the case? No. There's a musical chairs thing going on, except for one person is not going to be without a chair when the music stops. Half of the people, actually 99%, may be out of a chair when the music stops. It's going to be a bloodbath when this is all said and done. And I don't think it's all going to happen the next month. I think it's going to take time. I think you've got the Basel stuff this summer. You've got all sorts of reasons why this is going to get really ugly and nasty. On to mining.com. The LBMA is liaising with the CME Group and U.S. authorities on gold premium. They're liaising, ladies and gentlemen. No, they're begging, okay? The London Bullion Market Association said on Thursday, according to the article, it is liaising with CME Group and U.S. authorities on the significant premium of Comex gold to the London market. Liaising. They're like, basically, help us. Please help us, sir. Will you spare some gold? The U.S. gold market has been trading at a premium to the London market since the U.S. presidential election result late in 2024. This happens from time to time in markets around the world. Yeah, but what are the reasons why? London gold market stocks and liquidity remain strong, the association added. U.S. gold futures rose to an all-time high of $28.53 per 20 per ounce on Thursday, trading at more than a $50 premium to London spot prices, which hit a record high of $27.98 an ounce. Why would Comex prices be higher? Because they had shortages, and you have to have a premium to get the actual delivery, and that's why London had to shoot it over, because they had it because the premium was lower. Higher premium, less gold. Lower premium, more gold. Then you're going to shoot gold over here until those premiums eventually even, except for the fact London's already out and the premiums haven't evened. So that means there's more demand over here in the U.S. than London can supply, and London's trying to go to the central bank and say, please, let me have the gold. That means there's a shortage in the cycle. There's not enough gold in the cycle. They're not going to be able to balance that equation of prices, of those price differentials between the U.S. and London. Ain't going to happen. I'm going to show you here why in a minute. But let's keep reading some of the mainstream media stories before we get further into this rather interesting story on what in the hell is going on with gold around the world. According to Morningstar, provided by Dow Jones, today at 6 a.m., quote, Comex gold warehouse stocks have climbed 30% in 2 weeks. A rush on physical gold, thanks to President Donald Trump's tariff plans, has fueled a rise in prices of the precious metals to fresh record highs. Again, blaming the tariffs. And yes, it probably has something to do with it, but that ain't the only part of the story. We'll get into that in a moment. There are many demand drivers in gold currently, but one in particular is adding pressure to an already tight market, said Peter Spina, president and founder of gold news and information provider goldseek.com. There is incredible demand for physical gold in the New York markets, he said, referring to it as a physical gold rush. Their prices on gold Thursday climbed to a record high, with the April futures contract on Comex touching a high of $28.5320 an ounce. That was the highest intraday level for the most active contract on record, according to Dow Jones market data. By the way, the derivative price was trading higher than the spot price, which is abnormal for it to be so wide. And usually arbitrators will come in and basically even that out, but you got to have some gold to back it up. And guess what? There wasn't gold to back it up. So that happened for almost the entire month of January. It was really juicy. And it meant that there were shortages in Comex. Even all this gold coming over since November, there were still shortages. That's why I know it's not stopping yet, because the price differentials aren't evening out, which means they don't have enough of the real stuff. You understand what's going on? That's why everybody's in a panic. The situation for silver, meanwhile, would be significantly worse, as several times more silver is imported, primarily from Mexico and Canada and the U.S. to meet domestic industrial and investment silver needs, said Spina. Those who are caught short physical metal are looking around and seeing a window closing here, he said. They desperately seeking physical metal before the price could jump overnight. Price spreads. A big price spread, according to the Morningstar article, has emerged between the London spot price and the near-term New York futures price for gold, as well as for silver, said Stefan Gleason, president and chief executive at bullion dealer Money Metals Exchange. That's based on fears of Trump slapping tariffs on imports of gold and or silver from China, Canada, or Mexico. If not across the board, he told MarketWatch, except for the gold's not coming from there. It's coming from London. Why don't you guys pay attention to where it's actually coming from? Come on already. Actually, it's coming from more than one place in London. We'll show you that in a minute. But okay, tariffs could be part of the reason. I get it. The tariffs, you do want to import the gold because of tariffs. And yes, if you have to get it through London, yes, you do. But that's not where it's coming from. So it's not the only reason. On Thursday afternoon, Trump told reporters at the White House that the tariffs in Canada and Mexico will start Saturday. And yes, they will. That came out from the press secretary today. JP Morgan plans $4 billion gold delivery in U.S. amid tariff fears. Article at Bloomberg today, noon Central Time by Jack Ryan and Jack Farchi. JP Morgan Chase & Co. will deliver gold bullion valued at more than $4 billion against futures contracts in New York in February at a time when surging prices and the threat of import tariffs are fueling a worldwide dash to dip metal in the U.S. 22,538 contracts may have something to do with $4 billion in physical delivery. Yes, there is a squeeze and going on in 1 month on the Comex, and how fast it can change. What have we been saying for years? Zero Hedge has a nice little graphic for more than just JP Morgan. The big three Comex banks, JP Morgan, Brinks, HSBC, total vaulted gold. Gold, another spike on physical stockpiling identical to that seen during the COVID pandemic. According to Zero Hedge's Twitter, at this rate, they're predicting 3,000 in weeks, if not days. See that massive little spike? You had a spike during the health scare of 2020. I'm going to call it the health scare of 2020 because why? Because economies were shutting down and people wanted to move gold around to deal with contracts. But that was just economic issues, not necessarily shortage, even though we knew there were some shortages back then, they could cover it. It was more just to deliver contracts. Now the shortages are greater, and it's partially tariffs, but it's also partially because the gold has been going out the back door before this by some country coming in and intervening, which I'm going to get to in just a moment. See, it's not just the tariffs, and it's not just for February 1st when the tariffs are issued. It's actually dating back before one of those sovereign nations was taking the gold, much like the sovereign nations of Europe did up to 1971, which caused us to go off the gold standard. I'm not gonna tell you just yet. Let's go to Rhoda Manley on Twitter. Swiss gold exports. Look at the Swiss gold exports in December of 2024, according to Ronan. Swiss gold exports to the U.S. on his Twitter account, Bullion Brief, surged to December to 64.5 tons, an 11-fold increase on the previous month and the highest monthly total since March of 2022. Swiss gold exports to the United Kingdom also surged in December to 14.3 tons from 1 ton. So in other words, Swiss is putting gold in the hands of the United Kingdom, and the United Kingdom is using that and sending it to the United States. And the Swiss are also sending the United States. So it wasn't really Canada and Mexico exporting the gold to the U.S. So was it just tariff fears? Because it was Swiss and London. How does that all... So there's something else going on. What else is going on? I don't know. Before we get to that, according to Laurie Meadows, her Twitter account, the U.S. Comex is staring down the barrel of July 2025. This is another catalyst, by the way. I'm just going to throw another catalyst on the pile because there can't just be one, can there? Oh, no. We knew this was all going to break apart in spectacular fashion and blow up right in front of blow up right in front of you on TV and in YouTube and the media so you can, eat your popcorn and watch it. Under Basel III, according to Laurie, the Comex will have to hold more gold as the agent bank are long, but the big boys, Goldman, take physical delivery for private vaults, and maybe the Treasury too. According to Capital Brief, which she's quoting here, this month alone, Comex gold inventories jumped 36%, with 244 metric tons of inflows, the highest since May of 2020, the paper said. Last week, June gold futures on Comex traded at a premium of up to $60 per troy ounce over London spot price before narrowing to $10 as shipments arrived in New York. The Bank of England, HSBC, and JP Morgan declined to comment. Well, actually, they commented back here later on. Oh, and I got to show you this video about this guy admitting that there's no gold in the London vaults. Now, it doesn't mean there's no gold in the London vaults. He's basically saying overall, there's not enough to satisfy demand, which we've known it's rehypothecated. We know it's a Ponzi scheme. We know that there's 100 claims to everyone in the U.S. market and probably on the LBMA as well, even though they're much less transparent with their information. Let's listen to this gentleman tell the truth about the matter. Shall we?
Well, I think the bigger story than the decline of gold is what's actually happened to the gold. You could go into a vault in London a couple of years ago, and they were packed to the rafters with gold, and the gold would trade from me to you to somebody else. You can walk in those vaults today, and they're virtually empty. All that gold has been transferred out of London, 26 million ounces. It's gone to Switzerland, where it's been recast into a higher grade and shipped off to Hong Kong, and then into China, never to return. So the most interesting thing, especially as we look into 2014, is if there ever is interest in gold again, I'm not saying there is or isn't, that gold is just not there anymore. It's really amazing. They're building these 2,000 metric ton vaults for gold all over Asia. And the Chinese, they don't want to have US dollars anymore. They want to have gold.
Yeah, and gold's run, the longest run since, what, 1929?
Oh, it was incredible.
Might come to an end. I mean, it's only got a few more days to turn it around. It seems like it's come to an end.
Yeah, $700 in a couple of days. It would be very, very
miracle.
We would need the nutcracker to come here and dance around that. No, it's going to end this year. Yeah. But I think what's interesting is just, you know, if we look at iron ore, for example, as a...
I want to point something out. YouTube that was posted 7 years ago, but if you go further in the video, this is a 2014 report. This is 10 years old. He's saying there's no gold in the London vaults and China's taken it. There's no gold in the London vaults and China's taken it. There's no gold in the London vaults and China's taken it 10 years ago. You mean it was just the tariffs that all of a sudden that tariffs bankrupted gold in the span of a month? Don't think so. Let's go on to read this story at GoldFix. Goldman raised their price from 2,700 to 2,900 and basically showed a new gold model fundamentals. They got a new little chart and a little, you know, all this math and stuff which says gold's going to go higher. Gold is resetting correlations with the West. In this report, they also reveal their take on if correlations with rates are broken or not. Their conclusion is a golden reset is in progress. This is according to Goldman Sachs. While the gold price to rates relationship remains intact and changes, the secret buyer has elevated prices and the reset relationship in absolute levels. Who is the secret buyer? I'm going to show you. I just told you it was. The video told you it was. We know it's China. We've always known it's China. The secret buyer has been bankrupting and is just now crashing. And tariffs is not the only reason. Stated another way, Goldman is saying gold is readjusting its correlation against Western rates as GoldFix has shared with subscribers for 18 months now. For example, this is according to the GoldFix article. Gold hasn't decoupled from yields in the dollar, but the beta has increased. Well, actually, we've shown that it has decoupled from yields in the dollar. This was before. Goldman's secretive buyer discussed. The bank openly discussed increased secretive buying of gold in London being held for an unknown buyer embedded in a walkthrough of the LBMA market structure. Our estimates of China's institutional gold purchases in the London OTC market align with the PBOC reports, but tend to be higher, start earlier, and last longer. While the PBOC, the People's Bank of China, reported no additional purchases after April, our nowcast estimates 50 tons of institutional purchases from China on the London OTC market in May. Who is it? Although they're not included, evidence points to China. Looking at the chart, Exhibit 4, you see an increase to China? Yes. From the Jerusalem Post. Recently, a credible analysis confirms what has long been suspected. China is a significant and secretive buyer of gold over and above their announced purchases likely since the Russian invasion of Ukraine started. That's why the gold price has been surging, ladies and gentlemen, against the bonds, against the tech market, against everything. This revelation aligns with reports previously shared in the space titled Goldman Shares a Secret. Goldman Sachs has pointed to such activity, and now further legwork by Money Metal's own analyst confirms it. And a post titled Chinese Secret Bank, Central Bank just secretly bought 60 tons of gold substantiates these claims. Quote, the People's Bank of China is covertly buying very large amounts of gold, adding upward pressure to a tense gold market. According to Chinese customs, gross gold import into the Beijing region for September account for 69 tons, which is roughly in line with the UK's gross exports to China's 60 tons. What? Who? And he got some images. Here's weekly trading volume on SGE of gold. It's a lot. They're trading a ton. And where's it coming from? Here's the covert buying down here. Here's the official People's Bank of China. But here's all the rest of the gold going in. Where's it going in? It's not going to the Bank of China. It's going to other places that China is going to use where they don't have to officially report it, or they're just sticking it in there and not reporting it because, you know, it's China. They don't care what we know. They do not care. And I'll get back to a summary of this in a minute. I also wanted to do this little quick note on GoldSeek about TD issues a red alert for silver. Lest you think it's just going to be gold, silver's about to have its day. According to the article, quote, gold is breaking out to new all-time highs this morning, rising $25 to $27.95 an ounce, which is actually a little bit higher, 28 something. At the same time, silver continues its march upwards, rising another 60 cents this morning to trade at $31.65 per ounce, according to Gold Seek article put out by Money Metals Exchange, which actually originated from TD. High drama in institutional markets for gold and silver, unfolding mostly in the background of the past 45 days, may finally be bleeding out into the mainstream. On Wednesday, an analyst at TD Commodities warned that the market is especially underestimating the possibility of a big move in silver, writing, quote, explosive upside convexity. Convexity is not a straight line. This is convexity. It's a ball. It's an exponential function. If you remember your math classes. Explosive upside convexity in the silver markets remains severely underpriced, particularly with a few days remaining until the proposed deadline for tariffs in Canada and Mexico. More tariff talk. But we showed you it's not just tariff talk. We showed you China. 10 years ago, this dude comes on the mainstream financial media and says London doesn't have the gold. It's being repackaged, basically remelted and sent to China through the Swiss refineries. And we've seen the data showing the People's Bank of China's secret imports. And we saw the stories about China. And now it's up in Trump's tariffs or like a cover story. Is it a catalyst for January? Yeah, you saw it in the data. But it's been going on for at least 10 years. At least the East has been robbing the West of their gold. I've said it on this channel so many freaking times. And analysts are confirming it. So that you have this one tariff issue and it's causing a panic. They can't get enough into the Comex because the price aren't mediating. You don't have the mediation between the futures and the spot. Meaning there's more demand for physical that cannot be solved. They've already drained London. London is begging hat in hand to the central banks. If you're a central bank, you're saying, no way in hell, dude. Because if I lease it to you, I'm not getting it back. Because everybody knows it's at least 100-to-1 shell game on the paper markets. And it's all coming due. The game of musical chairs is ending. And it's blowing up in spectacular fashion. This is going, if it keeps going like it is, it will bankrupt the Comex and the London markets. They will lose credibility. You'll have a force du jour. You'll have a blow up all over the place. Stop trading, straight up prices. China and the BRICS will eventually take over those markets as having more credibility because they have more gold and the prices are more accurate because the West has been robbed. And think about to prior to 1971. What happened to gold when we were on a gold standard, meaning this much gold for this amount of dollars and don't change it? Well, they printed more dollars than the gold. The Europeans figured it out and took the overinflated dollars and grabbed our gold and took it and took 2/3 from 27,000 tons to 8,000 tons, which we still supposedly have, except for we don't have it because if we did, we could have bailed out the Comex and the Comex went to London because if the U.S. government had it, they probably could have leased it from there, meaning we don't have the 8,000 tons more than likely, and there hadn't been an audit done in 70 years. The U.S. is bankrupt of gold. The U.S. is bankrupt of gold. The U.S. is bankrupt of gold. The Western markets now are bankrupt. London and the U.S. are bankrupt of gold, and there's not enough, and guess who has it? China, Russia, and the BRICS. Thank you very much. Game, set, match. You're watching the beginning of the explosion. Here it comes. We've been talking about it, and bam, all at once. Remember what I say, these things kind of, and then do a waterfall, and they go, we're at that first stage of the waterfall where you're looking over in your canoe and going, oh, that's 200-foot drop. And you're desperately trying to go backwards, but you can't because the waterfall's got you, the rapids have got you, and you're going over the edge. That's where we are. We're just like sitting and peering down, going, ah, no gold, no gold. And it's going, and the whole thing's going to blow up. Yeah, that's my John Madden explanation for what's going on in the gold market. Stay tuned. 2 seconds after this, we're talking about the gold bills in Missouri, in Florida, in New Hampshire, in Montana, and in other states that we're pushing to get gold as money. And you better have your gold. And if we can get gold as money, it may save your butt. You need to watch this. Do not turn the channel for the next 20 minutes to listen to this report. God bless you all, and I will see you next week. This is Rob with the Freedom Report. And here we go, talking about gold and silver as money again. I wanted to bring you guys an update on that on the backside of our gold and silver report, because while it's great that we have gold and silver, it's not as great as if we can actually make it money again, circulate it, and use gold and silver for their intended role. So I brought on two gentlemen who are going to give us updates on that. We have Patrick Holland, who's working out there in Missouri for the Missouri Freedom Initiative, as well as Daniel Diaz, our chairman for Citizens for Sound Money. They're going to bring you updates on Missouri, Florida, and a couple other states that they're actually assisting in. See, we're not just doing this in one place. We're trying to do it all over the place. So Patrick, I'll start with you. Interesting stuff going on in Missouri with regards to your bill. I found it quite funny, but I thought maybe you could give us an update on the latest.
Okay, thank you very much for having me on, Rob, and it's good to see Daniel again as well. Okay, Missouri. Well, you probably have heard this before because we deal with legislation all the time. There's only one way to pass a bill, but there's about 1,000 ways to kill it. And one of the ways is just stalling. And we do have one of our bills for the Missouri Constitutional Money Act having to do with gold and silver, legal tender legislation, plus a few extra goodies. That's SB 25. It's sponsored by Senator Mike Moon. The unfortunate thing is it landed into a committee that is headed by Senator Crawford. So that's Sandy Crawford. And she believes that the bill is not actually constitutional and is actually passing it off to some attorneys to take a look at. Now, there's several ways we can look at this. Number one, she doesn't know the Constitution, the very thing that she swore an oath to when she took office. But the more likely scenario is this is a stall tactic, so it doesn't get heard in committee. And so for her to say, and let's go through really quickly what we do in our bill here in Missouri. First off, it makes gold and silver legal tender. And then it does something else by default. It eliminates the capital gains taxes that we have been burdened with here in the state of Missouri on silver and gold alone, not capital gains on stocks or anything. But we also have something very interesting in our bill, and that is anti-commandeering doctrine. That's directly from the 10th Amendment. And what that does is if the federal government wants to start confiscating gold or silver like FDR did back in 1933, that the state of Missouri, in fact, will not assist the federal government with any confiscation without due process. So that's very important. What that does is that eliminates what's called civil asset forfeiture on people's money. So that's essentially what our bill does. You know, we do a few more things, but it's, and one of them is we're asking the state of Missouri to actually, and this is important, to actually take silver and gold for the payment of taxes. Now, and as I go up to the Capitol, and Daniel has been up to our Capitol many times too, helping us out. As we go up to the Capitol, people say, well, that's really not necessary. Well, it kind of is, because, Rob, I see us as competing with the Federal Reserve's FedNow program. So the Sound Money Act, the Constitutional Money Act, whatever you want to call it, to make gold and silver legal tender, is in effect our way of competing with the FedNow program. We're trying to get businesses on board using gold and silver with all the free market options, from gold backs to ATM cards and whatever. I mean, all these options are on the table. And I literally got off the phone just earlier this week with a senator explaining. He says, well, why aren't these options in Missouri right now? I said, capital gains tax. They're not interested in coming into a state where there's capital gains tax. That complicates when the money that you're using to exchange for goods and services itself is taxed. That is a logistical nightmare for a business.
So it sounds like, Patrick, what you're saying is that it could be a stall tactic, and there's not really anything in the bill that can be considered unconstitutional. I mean, no, we have gold and silver in the Constitution. Stopping civil asset forfeiture and requiring due process certainly is part of the Constitution as well. What are the chances you think that this bill doesn't get heard in committee because of this? Is there any recourse? Is there any way to kind of force something to stop filibustering and allow it to be heard?
There is. And what Mike Moon would have to do is go to the Senate Pro Tem, that's Cindy O'Laughlin, and ask her to remove it from Sandy Crawford's committee and put it in a different committee. So there is that option. But we should be, I think, very soon, the House companion version of the bill that is being run by Representative Bill Hardwick. That should be going into committee here pretty soon. So we have two bills, one on each side. And so we can start working with that one and get it through the House, and then basically make sure that it goes into a proper committee when it's done in the House and it goes through the Senate. You always double up in Missouri. You always have a companion bill on something special, something unique, or something that's very needed. And that's exactly what we did with our bill too. We have one in the Senate and one in the House. Now, as far as that goes in the Senate, it's just simply a stall tactic and nothing more. We're still very early in the legislative session. but we want to just kind of cut these things off when we start seeing stall tactics as soon as possible. When Daniel was with us last year, we saw a stall tactic that lasted 11 weeks in Michael O'Donnell's committee. 11 weeks he kept it in his committee. And so, and then the strange thing was, and I don't want to get into politics or anything, he had a real problem with getting rid of capital gains tax on gold and silver, and he's a Republican. And that was his first excuse. And but it got worse from there. And he was using some pretty wild excuses for why he was holding on to the bill near the end. I approached him at week 6, and he did fib to me. He did say that there wasn't enough support to pass the bill. But at the same time, we already canvassed the entire committee, and so did Bill Hardwick. We knew that that was a fib.
Yeah, we had a majority of the votes.
We did. And so, there's stall tactics all over the place. And it could be that they don't like me personally. I think I'm a good guy, and I'm easy to get along with. But at any rate...
Well, you did try to take out the Speaker of the House, and he has allies.
Yes, I did. But you know what? That's a one-off, though, right? So I just, we took out the Speaker of the House. He can't run for politics anymore. Thanks to the grassroots of Missouri, who were able to expose that man. He stopped silver and gold 2 years in a row, 2023 and 2024, Rob. Single-handedly, the Speaker of the House would not let it go through. We got it through the Senate both years.
It's interesting. We see it in a lot of states where, like, the Speaker of the House or the leader of the Senate can stop something just because they don't want it heard, or filibustering tactics in the committees. And while I suppose that those have their value, you need someone to stop a crazy bill, right? Or to stop somebody overloading, the legislatures with bills. There has to be recourse in those cases, because just not hearing something that the people have said that they want to be heard and has a lot of legislator support, that's a part of our political system I'd like to see changed at some point. Daniel, going to you over in Florida, what's going on over there? This will be our second year in Florida that we've been working with Citizens for Sound Money. We spent well over $100,000 last year. We got a lot of traction, a lot of support. Seems as though things have changed quite a bit in Florida. Give us an update.
Yeah, so in politics, 24 hours could change quite a bit. So in 1 year, even a lot more can change. So we've had a change in the Senate, President, and the Speaker of the House. Last year we did a lot of work. I mean, like you said, we spent over $100,000 with our lobbyists and just other campaigns in Florida trying to get the Senate president at the time, I'm not going to mention her name, to budge and at least give us a hearing, because we knew we had the votes. We couldn't get anywhere because without the Senate moving, the House wouldn't move. So Florida, what we were able to do, we were able to get a $200,000 appropriations bill that studied the effects on of making gold and silver legal tender. If you wouldn't mind, I'd like to share my screen with the report. Here it is. CFO Petronas advances gold and silver as legal tender in Florida. You can go to the CFO's website, and on December 11th, Wednesday, December 11th, he released a report about how he's favorable towards it. I'm paraphrasing, and that the report's going to be coming out sometime in mid-February. So we were able, through our lobbying efforts, to get a $200,000 appropriation to see the effects. So far, we have no idea what they're going to come out with. We're hearing from our contacts in the government that it's going to be favorable, the report, but we don't know until it comes out. We are hearing from leadership from the Senate and the House side that we are going to get something passed. What that is, we don't know. And here's something for your listeners. There's two things you don't want to learn how it gets made: sausages and legislation, right? So it doesn't. The bill that you first introduce, that a sponsor first introduces, by the end of it, it could look like something completely different. So we've been working with staff on the Senate and the House side, specifically in the Senate side and the Banking and Insurance committee. They have analysts, attorneys, and we met with them recently. We're going to clean up some of the language that they feel is confusing. Look, our job as lobbyists is, one, to listen to the concerns of our sponsor and other legislators, especially the bureaucrats that the legislators, that they have a lot of sway with the legislators, right? They're the experts. They're the legal experts. They're the ones that do hours of research, and then they create a policy analysis or a fiscal note. And legislators, you put yourselves in their shoes. Depending on the state, They could have thousands of bills. They have hundreds of lobbyists coming to them, educating them. So they might know a lot. I mean, they might know about a lot of bills, but it's an inch deep, right? Except for maybe the bills they're passionate about, which they have a passion project for, which might be, a mile deep. We as lobbyists, Patrick, myself, we know this because this is our life. We live and breathe gold and silver. So we have a lot of information, but we have to somehow break it down and explain it quickly so that they can grab the bullet points. Now, the bureaucrats and the analysts, they are trying to go as deep as we are, right? So it was great that we were able to meet with them. So Florida, we're really excited that we're going to make some edits to the definitions and a few other things. You'll see that coming out if the sponsor agrees to change it, right? Everything goes through the sponsor. Once we find a bill sponsor, yes, we help write the legislation with them. They gave input. Ultimately, it's theirs. So we can make any recommendations. If the sponsor doesn't want to make the change, they don't have to. But there's also leadership. And for your listeners that are listening, and I think you've alluded to this in other episodes, when it comes to the state legislature or even the Washington, D.C., there are three people that are like lowercase gods: the governor or the president, the speaker of the House, and the Senate president. If they don't want something passed, it's not happening. When they speak, it's law. So it's a hierarchy in almost every single legislature. And in uniparty states like Missouri and Florida, where we have a supermajority and we don't even need the Democrats to speak, it's even more precarious, the hierarchy, because people want to move up. People are self-interested. They want to move up in the party and the legislation and be chairs or hopefully the Speaker of the Senate of the House in the future. So, sorry, those were my cats. So yeah, Florida's fantastic. And we're also working in other states. Like Patrick and I have been talking to legislators and friends of legislators in Montana. We have Senator Lieber in South Carolina who filed our legislation, Citizen Money Model legislation in South Carolina. We know Texas is doing something with the Economic War Room. Utah is looking to expand their gold and silver legislation. I just talked to New Hampshire, our sponsors from last year. They're thinking about adding our model legislation as an amendment to something. So we're working, not just Florida, not just Missouri. We're working across the country. We just need people to reach out to us and ask for assistance. We'll analyze language. Patrick and I and others. We have Larry Hilton from the United Precious Metals Association. He's a legal tender expert. We have other people from around the country and other organizations that can assist us in helping you if you're a legislator. And my number one recommendation, if you are a constituent and want to see gold and silver, call your House reps and senators if you have legislation. And if you don't have legislation, still call them and see if they're willing to add it as an amendment. Most states, the filing period has ended. You can't file new bills. But it doesn't prevent you from adding an entire bill as an amendment. It sounds a little shady, but that's just how the system works. So if you want to see gold and silver pass, we're updating our website at Citizens Sound Money with a list of states that currently have gold and silver legislation. I'm not sure if it's completely updated. I know we've been working on it. Hopefully within the next week, we'll have it updated with the latest information about your state and what type of legislation is there. Call the sponsors and then call the members of the committees that those bills have been assigned to. Not everybody, just the committees, because it needs to get through the committee before it gets to the House floor or the Senate floor. So, I mean, that's our update.
So, yeah, that's your update. Give just a little bit. We're going to wrap this up pretty quick. We don't want it to go too long, but just give an update for both of you, 1 minute, on how long you've been working in these states to do this. I just want clarity for people that are watching, how long we've been there. We talked about the process, but I want people to get an idea for how long it takes, because I want people out there to support you. It's easy for us to watch this like it's a television show and say, I hope that all gets done. But we need support, and it takes time for this change to occur. So, Patrick, how long you've been out there working in Missouri?
Okay, as far as gold and silver goes, is what you're asking, right?
Right.
Okay, 2022 is when we started, and we've been helping out other states along the way as well. So at any rate, yeah, we've been doing this for 3 years now. And what I would like to say about it is, first of all, this is not as easy as I originally anticipated, because of how difficult it is to make the sausage. There's all kinds of bear traps, landmines legislatively in the Capitol in Missouri, everywhere you speak. Basically you're getting, this weird resistance from Republicans. We don't want to lower taxes. What are you talking about? And in fact, Daniel helped us figure out that it was less than $1 million a year is what the state would be giving up in the state of Missouri for foregoing capital gains tax on gold and silver. So, but since 2022, and a lot of states that we have helped have been successful already, have already gotten their bills through, and with no resistance and with no help from, us or any other grassroots. They just went right through. And so some states they slide right through, and some states we have incredible difficulty, like Missouri.
All right. What about you, Daniel? How long have you been working on this for citizens?
Since my first interview with Jim back in April of 2023, when I started lobbying for Texas as a volunteer, and then they brought me on as legislative director. In Florida, the first phone call made to legislator was in June. So since June of 2023, we've been working the Florida legislation, and it just moved from there. So it's been almost 2 full years. We had a few months left before it hits the full 2 years. We've done a lot. We went from people not knowing who we are or what this gold legislation is to when I walk in, they're pointing at me, oh, there's the gold and silver guy, right? Because we've lobbied and talked to everybody. Like since just December of this year, when committee week. So for those of you that don't know, you have session, which is when they're, like Congress, they're at the House and the Senate floor and they're debating. Before session, a lot of states have committee weeks where they do a lot of the work before session. And this is the most important time, in my opinion, to try to get legislation through, or at least through the committees, because when session starts, you get a head start. So we started in December of this year, and we've already met about 40 legislators. And we're going to continue meeting. Now, there's situations in Florida. I don't know if you've seen in the news. There's a war between the governor, the Speaker of the House, and the Senate president about immigration, and everybody's getting caught in the crossfires. We'd had a bunch of appointments canceled. We had them rescheduled and a bunch of other things. But yeah, for about a little over a year and a half in Florida, and almost 2 years total, we've been pushing in other states for gold and silver.
All right, so just real quick, we're going to wrap up here in the next minute. How do people get in contact with you, Patrick, if they want to help, or just information on what you're doing out there in Missouri?
Absolutely. Just go to our website and sign up for the newsletter, mofree.org, mofree.org. That's how you get a hold of us. It's really simple. It's really quick. And you just get on an email list. You find out everything we're doing. And I want to say one more thing to all of you out there. I am just an IT guy. I have my own business. I work on security camera systems, servers, computers, that kind of stuff. That's what I do for a living. I don't have any training, to lobby at all. If I can do it, anyone can actually get involved in their state. Yeah. Please do get involved in your state legislature. Start working with your legislators to get silver and gold legislation passed.
Absolutely. And I want to pair it what Patrick said. We had a constituent who was interested in what we were doing as gold and silver lobbyists come to Tallahassee with us, and she absolutely loved it. If you want, listen, the Capitol is the people's house. They technically can stop you, but they shouldn't stop you from going in the Capitol because it's public, right? It's public funds. You have represented them. You put them there. So if you want to learn a little bit about the process, take a few days on vacation and go to the Capitol and go to the committees and talk to your reps and senators. And if you're in Florida and you want to come up, I'm all about setting up a gold silver day at the Capitol, or as Patrick Holland calls it in Missouri, knock and shock. So if we get enough interest, we'll schedule something and have everybody come to the Capitol during session and do a knock and shock in Florida. So how do you get in contact with us? Go to citizens4soundmoney.org, or you can email us at support@citizens4soundmoney.org. And then if you want to call us, we have a toll-free number. It's 877-749-6944. 1776. Again, that's 877-749-1776. That will ring our digital phone system, and I'll get on my cell phone and I'll most likely answer it. You'll be talking to me. And if you want help, let us know. Shoot us email, or if you want to follow us on X at 4 Sound Money, at 4 Sound Money. Same thing with YouTube.
All right. Thank you guys for giving us the update. We'll bring you on from time to time. I think it's vitally important we cover not only the gold and silver markets, but all the efforts to get gold and silver as made again. Because at the end of the day, I mean, you look at what's going on in the world, they're going to have a whole lot of time before people are going to need to actually use this as money. It's very important to put the legal frameworks in place. Thank you guys for everything that you do. Thanks for joining the program. We'll have you back on.
God bless you, gentlemen. Thank you.